Debt problems in Greece and the euro's slide have rattled investors in recent weeks. Daniel Tenengauzer says there are better places to look for profits than Europe right now. He's head of emerging markets, foreign exchange, and rate strategy at Bank of America Merrill Lynch. He's here with us live this morning. Thank you for coming in. One of the places you might start might be Kuala Lumpur. You're looking at some Asian currencies right now because of interest rates.
Well, the main story there is growth, really. That's the region leading growth. And actually, last week, Malaysia was the first central bank in Asia to hike interest rates, which reflects the story there.
Now, who else is in line to maybe do that and attract money into their country?
We really like the India and the Korea story. India, because inflation there is really high, and we think they are going to engineer a stronger currency. Korea is more of a pure valuation story. You just think that the won is cheap here.
The won cheap, but Korean markets have been on a tear over the past year.
That's right. It's been very, very, very volatile, and that's because it was also very volatile going into the crisis. We think that they leverage a lot. The current account turned in a very meaningful way, and that should be really supportive for the won.
Well, much of what happens in Asia, of course, is dependent on the 800-pound gorilla in the region, and that is China. That's right. A lot of talk these days about won revaluation. Are we getting ahead of the game, or is it likely coming sooner rather than later?
Well, eventually the renminbi will appreciate. We think that appreciation will be very gradual, and the reason is because it's been staying there for such a long time, and it was a crisis measure that was applied by Chinese policymakers. So we think it will happen, but it will be gradual. So we have a 650 for the end of the year, which is about 4% appreciation.
Well, do we get an announcement from the Chinese, or is this just something we're going to notice happening over time?
We'll just notice happening over time. We don't. Again, it's not 2005 where there was actually an outright change in the currency regime. This is just them allowing the currency to fluctuate.
On a percentage basis, how far do they let it go?
We think about 3 to 4% this year, so to 650, and then another 3 to 4% next year. There is a chance that 2011 they might allow it for a larger appreciation.
And how does that affect the other currencies in the region? Who would you buy? Who would you stay away from?
For now, again, won is probably the best story, and the reason is because it's a large exporter.